Hey everyone, welcome back to my YouTube channel. In today's video, I'd like to go through the results that I experienced. In today's video, I'd like to go through the results, or rather my findings from my time testing the trim the hedge strategy, what I discovered, what I'm moving to, and why I got the results that I got during this session. It's been a while, and before I actually jump through the strategy recap, results, the next steps that I'll be taking, I'd very much like to explain what essentially was happening during this time. So, in as far as what I've been up to during the past, should be between 2 to 3 months that I haven't posted on YouTube, I've essentially been keeping busy with life. So, specifically, I've been trying to balance work. So, for those who might not know, I'm a software developer in my day job. Essentially, I've been trying to balance work, family, and trading. So, specifically, I can also say that certain things have been happening around that have prevented me or rather limited my posting. So, at times, you might find that my kids are around, they're playing, and I wouldn't want to interrupt them or keep trying to tell them to be quiet. So I have essentially used that as an excuse for not posting. But I can honestly say that I've been trying. On Twitter, I've been very active trying to post my updates and different aspects related to trading and life that I'm discovering or thinking about. During this time, I've also taken to writing a lot, and I'd very much like to post everything that I've been writing on my personal blog so that you guys um, might read everything that I'm thinking about and essentially explore the ideas that I'm noticing in my day to day. So recently, I've also tried to come up with a frequent schedule for posting. Essentially, I want to be recording the videos over the weekend and throughout the week where I'm busier with, let's say, my kids' school, work, and other activities. I wouldn't essentially be hampering your ability to learn from what I'm finding, but also making sure that life goes on. So that's essentially my update. That's what I've been busy with. And I know you guys are also busy with life. And that's why I just wanted to explain why the long quiet. But throughout this time, I haven't been assuming trading. I've been trading live. I've also been testing live and losing. Essentially, I experienced some losses using the strategy, and I'm basically considering that as the school fee, or rather the payment that needed to be paid for me to learn certain specific aspects about the hedging strategy. And that's essentially what I wanted to focus on in this session. But before that, let me just jump into the strategy recap so that those who might not understand what the strategy is about will essentially understand where we are coming from, or rather where I am coming from, and why I got the results that I got. And in the future, or rather in a future video, I'll essentially be exploring the different things that I noticed working and those that I noticed definitely don't work, and what I'm essentially moving towards at the moment. So, for the strategy recap, so this will just be a tiny recap, but for those who are actually very interested in this type of hedging or this approach to hedging, I definitely recommend watching the other videos that I've made. In the description, I'll be linking all those videos there, specifically a video for a backtest, so that you can essentially see the entries, how the trade is being managed, and essentially you can follow through in as far as the trim the hedge strategy is concerned. So let me just jump into the trim the hedge strategy. Specifically, trimming the hedge is a trade management approach whereby you hedge your trades equally and use the profits from the winning direction to close out parts to close out part of the losing position. Over time, the trade that is losing should gradually reduce until such a point you will have already dealt with the loss. I think showing you with a demonstration would be easier, but then I wouldn't demonstrate using the charts. I'll essentially draw out what the strategy is all about, and for a more in-depth explanation of what trimming the hedge concerns, I'll link down the videos as I mentioned in the description below. So assuming you noticed the market heading lower and you're finding that this is, let's say, a resistance zone, and you wanted to sell from this point, and the market comes back into your zone and gives you a signal to sell. You, as a trader who follows the plan, you decide to sell. Normally, you would place a stop loss at around this point. But then using this strategy, you don't place a stop loss, but rather you place a buy order. So remember, you have a sell order here. Sorry about my handwriting. So you place a sell order here and a buy order at the top. If the market instead decides to reverse, it takes in your buy order and it starts heading in one direction. At this point, it doesn't matter where the market goes, you just monitor the market and essentially use the profits from one position to close out parts of the opposite position. So to continue exploring this idea, assuming your buy trade goes into profit of about 60 pips, and your sell order at this point maybe is at negative 80 pips, because it's essentially moving against it, and you risked one lot on each trade. You could use part of the profits of these 60 pips to close out part of this losing trade and essentially reduce your overall volume you're holding in one specific direction. So the math would look like this. You have one lot buy, one lot sell. I won't be considering any swaps or commissions to make the math easier, but essentially at 60 pips, if it's euro US dollar, you'd have around $600 profit, and the losses on the sell side will be around $800. If you wanted to use, say, around $500 of this amount, or maybe $400 of this 600 amount to close out the losses on the opposing side, you would keep, I'm saying keep, $200 of this $600. You add that to your balance. Essentially, you close out the buy trade. So you close the buy, and then you close the buy fully, and then you use $400 to close the sell. So $400, you need to calculate essentially what lot size is equivalent to $400 in as far as where the market is at this point. So if it's just $400 and your sell side is sitting on a loss of $800 and you risked one lot, you'll find that it is equivalent to 0.5 lots. So you close out 0.5 lots of this $800 trade. So immediately after you close, you will realize that your balance will have increased by $200, but your equity is still down $400. So if you combine those, your equity will just have reduced by around $200. And then you keep doing this. So at this point, you essentially keep doing the same thing, adding to trades. You essentially add, let's say, a buy trade at the top. So if the market then at this point continues heading higher, you add another buy. Remember, this one has been closed. You add another buy to continue covering the losses that you're experiencing on the sell. And if this one then gets to 60 pips again, you use the profits again as you did before to close out this trade. You might have already noticed that by the time it's getting to this next 60 pips, this trade will be sitting on a lot more loss than it was previously. But this will happen only for a time. Essentially, the strategy works under the premise that the market will head in one direction, and at some point it will start heading in the other direction, which is essentially the very nature of Forex markets. The market tends to stay in a range overall. You could open up your charts, check from around 1970s or before if you can, and check, let's say, the monthly time frame. It should be high enough to see that general trend. The markets tend to stay within a specific zone compared to, let's say, stocks which tend to head higher. So essentially taking advantage of the fact that the markets are more likely to range. So when it gets to a certain point or threshold, you will likely add another sell trade based on your structural, let's say, based on whichever signals that you're looking out for, and you'll add additional sell trades in the opposing side, which will also continue covering your losses. If the market does continue just heading in the long direction, essentially people are only taking longs for an extended period of time, of course you will accumulate swap fees and other disadvantages which most people who are against hedging will tend to quote. But at some point you will clean out your trades and end up having dealt with the loss. So remember, the strategy doesn't essentially delete losses, contrary to what most people essentially say. They will call hedging a 100% winning strategy, but it really isn't. It's essentially a strategy that allows you to deal with your losses, essentially manage them and gradually reduce them over time and handle them, as opposed to taking the loss immediately, not knowing whether you're getting in the next trade or not. It's essentially a strategy that encourages you to continue riding the trend, as opposed to taking the loss and sitting out and waiting for a new entry point. So if that explanation was not clear, I definitely recommend watching the backtests and all that so that you can see the strategy in action. You're essentially playing the market, and over time you will notice, assuming you had a buy, the market heads higher, goes lower, triggers you onto a sell, and then it heads lower again, and then you add another sell, and maybe you added another buy here. As you can see, it works as a band. You have a band of buy and sell, basically a zone which you will keep moving across the market. So you have the zone, your zone might be at this point, the next point it will be at the top, and in another point it will be at the bottom. Basically you're moving your trades across the market, taking tiny profits of these moves. So in an ideal or mathematical sense, this strategy works. Essentially, if you think about it mathematically, you essentially have a rectangle that you're moving. I'm just drawing a market that moves. You essentially have a rectangle. At some point you have a sell and a buy here. At another point you have them here. Maybe this one is still in play. At another point you have them here. At another point you have them here. Remembering that you are essentially trading all these moves. At some point you realize that you have a lot of orders, and throughout this period of time you still continue playing the market. You still continue essentially enjoying the benefits of these moves. Of course, you still have to pay the cost of being in all these moves. But at the end of the day, you are still making money. The problem is dealing with the losses, or rather, dealing with the issues related to the losses. But why would anyone actually do this? Why would anyone take this approach to trading? For me specifically, it was to allow me to stay connected to the market without essentially focusing on the short-term movements. I realized in my trading earlier on that I would focus so much on a specific move, and once I'm taken out with a stop loss, I just stop looking at the market. And of course, this is actually encouraged. This is encouraged by almost everyone out there in as far as trading is concerned, that once you take a loss, stop looking at the market. But I realized this stopping essentially plays with my psychology. Specifically for me, maybe it might be the same for you, but for me, it prevented me from continuing to look at the market. Encouraging myself to stop essentially did not allow my edge to play out. Let me explain. Essentially, your edge is based on quantity. I know this is a weird thing that I'm about to say, and I'll explain it in a future video, like to a more in-depth approach, but it's based on quantity, whereby your edge starts showing up once you have a large enough sample size. But if you take a hit and you stop, your edge is affected, because every time that you stop, your edge continues to play out. It's just you are not participating. And I noticed that earlier on, that I wasn't essentially playing the game of large numbers. I was essentially playing the game of quality trades. And I'll definitely discuss this over in a future video, but I noticed that preventing myself from participating in the market essentially discouraged me from playing out my edge. So at the end of the day, I would end up having an edge, which I have backtested severally. If you backtest, you will notice that you tend to trade a specific period, and due to the loss of monetary connection, because you're essentially playing with fake money, you don't essentially think about the losses, you don't internalize them, you tend to trade a specific session. So you might have rules such as trading from 8 a.m. to 5 p.m., but on a day-to-day, if you lose, it starts playing with your mind and then you stop. Maybe you stop at 9 a.m., leaving out your edge that you have backtested from playing out, because you're no longer playing the game of large numbers. You're essentially playing the game of, I have lost, let me protect my equity. Of course, I noticed that this is also slightly related to the risk that you're risking per trade, but I'll be covering that in a future video. And I'm essentially hinting at a future video that I've already prepared, written off. I just haven't made it yet, but I'll be making it. You'll be having it by next week, this coming week. So essentially, something else that made me move to hedging was to foster a presence of a prediction mindset. As I mentioned, I wanted to stay connected with the market and focus on the flow of the market and think about why it is flowing that way. And using this approach, by staying connected, I stopped asking myself, where is the market going? But rather, what is the market telling me? I stopped trying to predict where the market will go, but rather focus on what is happening right now. I know it's weird. Instead of me thinking about what will happen in the next 1 hour, I just started asking myself, what has happened and what is happening? This essentially I essentially wanted to achieve this and incorporate it into my trading, because I noticed something else that is a problem with how I was trading before. I would essentially enter a trade, and once I've entered, I would marry the trade. probably heard about this term. You essentially marry the trade and continue holding it because I'm trying to predict this move. I'm trying to predict this move, yet this is what is actually happening. So at the end of the day, I wait for my stop loss to be hit as opposed to managing it based on what is happening. I don't know if what I'm saying is making sense to you all, but I stopped trying to predict the market, and at that point, it allows me to be present. So essentially, this was one of the goals that I had in as far as hedging is concerned. I realized that since I would enter a trade at a specific zone, enter an opposing trade, my loss is essentially capped. I've capped my loss to, let's say, assuming this is $100. This is the maximum amount I can lose once I'm hedged. So especially once you're hedged equally. So after realizing that, so once I'm in the trade, I'm essentially a participant of the market. I'm just observing, and I'm no longer predicting. Like, my loss is already determined. Once I've lost this money and I've walked away from the market, I'm no longer observing it. I'm no longer a participant. I'm just out there waiting for something to fall on my head like Newton and then maybe make a discovery. But being an observant allows me to play with the ebbs and flows of the market, because I might be hedged around here and my loss is still at 100. So I've capped my loss, but I'm still observing. So essentially, this was to allow me to be one with the market and to essentially allow me to participate and focus on my participation in the market, and to essentially improve my ability to notice what the market is actually doing, and potentially in the future be able to tell what might happen next. Because being a participant, I'm privy to what has been happening in the past. After you've observed, let's say, a specific market for a long enough time, you start noticing the patterns. Let me call them patterns. I wouldn't want to use that word, but let me just call them patterns. You start to notice the patterns of what is happening behind the scenes. You start to notice what might happen next by focusing on presence, not prediction. Next, I essentially wanted to experiment with different entry approaches. I realized that backtesting at the time, the way I was doing it, and in a future video, maybe I might discuss a better ways of backtesting. I realized that the way I was doing backtesting wasn't essentially doing it for me. There was no emotional attachment to what is happening in the market. There was nothing prompting me to focus on a specific entry approach. So I'd enter randomly, I'd enter using different strategies. But this hedging, since hedging allowed my maximum loss to be capped, I would essentially experiment with a specific entry approach and continue monitoring the market. Remember, presence. I would essentially continue monitoring the market and observe other entry approaches. So you would enter a buy and start looking for a sell, if that makes sense. Like, you buy and then you start looking for a sell. Once you see the sell, you exit the buy, if that makes sense. It allowed me to experiment a lot on when to enter the market. Remember, when you buy and when you sell, people tend to look at it from a buying and then exiting perspective. This allowed me to look at it from a buy and when should I exit perspective. Anyway, all of these I'll be covering in a future video, but I'm just mentioning why I jumped into hedging. Lastly, it was to just increase my participation in the market. Again, my quantity argument. I'll be making this in a future video coming out in a day or two. But this is something I noticed about life, and I'll be discussing it, especially in the context of trading. But for now, this was the goal. So did I achieve this goal? As you might have noticed with the way I'm talking about it, technically I achieved it, but with some losses of my own. So on to the results. So what actually worked in as far as my goals are concerned? So I noticed, number one, the most significant improvement that I noticed, I stayed grounded. being grounded in the market was very important. Since I was focusing on observation and participation and not prediction, you have this feeling of never wrong. You are never wrong because you are just observing what the market is doing. You're not trying to tell where it will go to next. You're just observing it, and wherever it goes, you are still making money. So it allowed me to remain emotionally stable and not start questioning myself like you were wrong yesterday, you made this loss, and all that. I know this is all psychological, but it essentially helped me build this psychological muscle of understanding that I'm not wrong. It's just a new trend. It's just something that the market is now doing. So I was able to stay present, and which leads me essentially to my next point. It helped me prioritize managing my exposure. So before, I would focus on getting a high quality setup and then risking a lot. But then using hedging forced me to essentially enter a trade, since I noticed, as I mentioned, the forex markets tend to range. So whatever you do at some point, it will just come back to where you are at. And if you actually hedge, you will start noticing this more and more. You enter at some point, a future point, it will just come back there. So it's a matter of managing your exposure as opposed to chasing a perfect entry. This approach, perfect entry approach, I noticed, and this is something I'll be covering in a future video, it tends to result to more risk. Since you assume that the trade is a high quality setup, and then you risk more. And then since you've risked more, you add the emotional aspect to it. Since it's more money risked, you add more emotional instability, and at the end of the day, it ends up messing up with your results. Additionally, something else I noticed that worked, it reinforced my discipline. It reinforced the importance of consistent rule following, since actually what kind of led me to failing, or rather losing quite a bit of money on this, was inconsistent rule following. I would follow certain rules today, the next I would follow others, and it kind of allowed me to play around. Remember, one of the goals that I was aiming for was to test out different entry strategies, and since this approach to hedging helped me focus on managing trades as opposed to managing entries and exits, I was allowed to play around. While yes, it was an amount I was willing to risk at the time, it was an amount I was willing to lose, the benefits that I got from it are significant, and that's why I'm saying this is a win. It reinforced discipline. It showed me that while your entries are not as important, and you can actually easily manage, or rather manage your exit out of a specific position quite easily, there is a significant benefit in finding a consistent rule set that you'll be following, which essentially reduces the amount of work you need to do while managing the trade. And this is something that doesn't tend to be reinforced, or rather it's discussed in a way that I don't really like. But all of this, I'll be mentioning them in a future video. For now, it's just mentioning this so as to avoid the video becoming too long. Lastly, it significantly increased my market participation. Let me mention a specific statistic I noticed. Essentially, I noticed I traded daily for 6 months straight. This is my longest streak to date, and I don't think I would have achieved it without hedging. Seeing a loss yesterday essentially showed me that I'm wrong. Essentially told me that you were wrong yesterday. There is no point in you continuing today. You're essentially just burning money. And yes, you might argue that a demo account would have helped with that, but as I mentioned, without the emotional aspect to it and trying to avoid the emotional turmoils and roller coaster related to trading, you don't essentially grow. You exit demo trading, and once you jump to a live account, you start burning through money like nobody's business because you didn't practice on your psychology. I'm a firm believer that your edge in trading comes from your mind. And that's why I tend to prefer the discretionary side of trading. Might be weird since I'm a programmer, but I tend to prefer the discretionary approach to trading since I noticed during this time that my results tend to be better when I trade without trying to and essentially follow the market, follow what is currently happening and being present. Of course, this is as a result of all the benefits that I observed using hedging, but using this approach helped me to stay very, very present and increased my participation significantly. I participated a lot, and that participation led to significant improvements in how I trade and in how I look at the market. I got better at not only realizing what the market is currently doing and the plays that the different participants are making in the market during this time, but also being able to predict what is more likely to happen next. Of course, since I focused on observation and trying to figure out what is happening now, that has allowed me to then move to the next step, which would be trying to figure out what could happen next. And of course, these are things that I'll be discussing in the future, but look out for those videos. So essentially, some part of this experiment, and I actually believe that all this helped. Some parts of this experiment worked. So what didn't work? And why did I fail? So I've already hinted at these aspects, but let me just mention them again. And I'm noticing my slides are misaligned. Anyway, mid-trade tweaks. I constantly change my rules. Of course, I mentioned that I wanted to experiment with different entry approaches and exiting approaches, but I constantly changed my rules throughout this experiment, essentially resulting in me losing a lot more than I could have initially. So that was a problem, and I definitely not recommend anyone doing that unless you're doing it on a demo account. But of course, that was a problem. Something else that I noticed went wrong was risk management. So initially, I was risking way lower amounts, and as a result, I experienced continuous growth. Actually, there was a point I think I experienced more than 90% growth in like 2 months, and this was nice. This was nice. It had me feeling nice. But then I decided to increase my risk, which was, in hindsight, dumb. So, but also had an advantage to it. So I increased my risk significantly and made way more, but for a time. Once things started changing, that's when I realized that my emotions were all over the place. Since by increasing risk, I increased my emotional reaction to each trade. And this is why I was saying, like, there's a certain aspect to demo trading that I don't like. And maybe I would in the future I would recommend approaches that I've used to kind of deal with this balance. But I'll just mention it right now. Essentially, what I've ended up doing is taking more prop farm challenges, not large ones, like really, really tiny prop farm challenges. So like prop farms that are below the $100 mark, to essentially give me the same feeling that I'm in a live market, but without risking a lot, if that makes sense. So it kind of gave me the best of both worlds, since I'm feeling like I'm risking, so I get to work on my emotional regulation and my the psychological side of trading, while also working on something on the side and trading actively the way I could have just traded in a real live market. Plus, this helped me deal with this issue and this. And finally, this one. But I want to mention this in a few. But essentially, after using prop farms, very tiny, tiny prop farm accounts, I've blown a few, but the amount I'm risking on those is quite minimal. That while I do feel the pinch, it isn't necessarily affecting my life. So that's the benefit. And it allows me to deal with my psychology. And lastly, something that I noticed, I realized at some point that the actually what caused me to increase my risk was in realizing, let's say I have mentioned that my account grew by 90%, but if it's a $500 account, this isn't much. So I was chasing an amount that would make sense. And that led me to increase risk. And this is actually why I would recommend trying to get a larger account or using proper money. So essentially, you could just use those amounts so that you can see your P&L. Remember, we are all humans. And this is something that as traders, we try to avoid, especially new traders. We need to realize that we are human. I don't think anyone would be doing something that doesn't really give them any benefit, any advantage, or improves their lives in any way, and doing that for a long time. So you need to find a balance of I need this, need or want this, and this is what I need to do to get it. So assuming you need to see a large balance or need to see yourself increasing money, if because at the end of the day it needs to be worth it for you to do. For all the time that you're investing in something, it needs to feel worth it. And after realizing that, I realized that that was also a prime contributor to me increasing the risk. Since I wanted it to feel reasonable, I was comparing what I'm earning on my programming day job to trading. And I know in hindsight it was wrong, but you also need to accept the fact that we are human and we need to focus on these aspects and think about how we are going to rationalize trading and the actions that you're taking in trading. And that's why I would recommend using proper money, because you're risking less, but the gains are significant. So there's an emotional aspect to it that you'll be working through, which would be your greed. So you will be working through your greed and realizing that I'm trying to target a huge profit payout, but I still need to work within these rules. And that balance helps you not to trade like a maniac like I did, and essentially focus on things that are worth it and focus on making rules and making approaches and pathways that would actually lead to you winning. So that's essentially something to think about. So I definitely recommend that. And this is actually what went wrong with me. So I'm not saying the strategy doesn't work. It's just that I modified it a lot, increased my risk a lot, and my account was too small, which kind of links these two. So definitely there are ways of improving this, and there are solutions. As you can see, there are solutions that have worked out related to this. But I should also hint at something about the strategy itself. I noticed problems which a commenter actually highlighted on, in as far as the equity is concerned. The equity, when you're working with a strategy, it keeps heading lower until such a point where you have recovered. And recovery was dependent on having a larger trade that wins and is not hedged, and luck. This, we just have to be very honest with it. I also noticed something very weird. I didn't really want to mention this, but on the original creators' videos, I heard of a rumor and I went to check it out. But there's essentially proof that the back tests had a problem. Essentially, he would backtest a chart before. He would backtest a chart before actually looking at the chart live. So he would break even or close out hedges faster. Of course, I understand that this might be a way to teach people better and show them that it works without necessarily having to sit on a backtest for a whole year or several months to essentially get to that point. But I can also admit that this was not realistic and I wouldn't recommend it. On my backtests, I've never done this and I'll never do this. since I actually want to show you the realities of using these approaches. So, for the issues related to the strategy, something is required. Specifically, a way of looking at the market where you are more often right than wrong. So you tend to be right. You essentially need a higher win rate to work with this strategy more effectively. And after realizing that, I decided to create my own strategy and my own approaches to looking at the market. And these are the things that I'll be recommending in the next video. And I'll be discussing essentially the things that have changed, the things that I would recommend anyone still looking into hedging to change and improve and work on before you actually make it work. I am making it work, and of course, I'll be posting my results, posting my findings, posting my backtests, my day-to-day trades for you guys to verify and check out and see what is actually happening. Since at the end of the day, the main goal of this channel is for me to showcase my process of getting to where I want to be. It's essentially my way of essentially being present, of essentially being accountable to myself, and to continue doing this by making it public. So that's why you are not seeing me trying to sell you on courses or trying to sell you on teaching programs or different websites and all that. I'm just trying to make this work. So keep that in mind and try your best to test these things out for yourselves and also experience what hedging is all about. It's a way different experience from trading with stop losses. So the key takeaways: I grew a lot. I gained a deeper understanding of personal trading psychology and habits, as I mentioned. The most significant advantage I got from this experience is the psychological benefits. Additionally, I have been able to refine my framework, and I've developed different approaches to hedging, which I'll be exploring and discussing. And we will have a bunch of backtests related to all of these approaches. And I'll also be recommending additional pathways that you guys could follow. Additionally, I will mention that this has paved the way forward, and my observations have essentially led me to the development of a more robust personal strategy, one that is hedged and another that isn't hedged, which is odd, I know. Have found an approach to trading from my observations that uses stop losses, but it works. So I definitely recommend going down this pathway for anyone who's out there. And in the next video, I'll be posting other pathways to hedging that I haven't yet explored, but seem interesting and seem potentially profitable to you guys. And I definitely recommend looking at them. So for the next step, what's essentially my trend direction or trajectory? So I'm promising more live backtesting, more live trading and backtesting. I'm exploring profirms, as I mentioned. I'm testing out a few, hopefully finding the ones that allow hedging, because they might state in their rules that they allow hedging, but if you make too much money, something might happen. So definitely I'll be testing this out, posting to you the results that I'm finding, and hopefully I get the accounts, and then, or if I fail, I'll also be posting that. But in the future, I'll be posting discussions on hedging changes and improvements actually in the next video that I'm posting after this, so keep an eye out for that. More backtests will be coming, more strategies and automated approaches. As I mentioned, I'm a programmer in my day job, so old habits die hard essentially. Lessons beyond trading. This is something that I'm introducing because I'm noticing a lot of alignment between trading, life, and human psychology in general. So I'll be posting this a few over time. So resilience matters. Every failure that you experience brings you closer to a strategy that truly fits your style. I found mine. I wouldn't say that it's profitable or consistently profitable yet, but it's working, and that's the beauty of it. You find that resilience, and as I mentioned, my participation in the market for the past 6 months, like daily participating, has worked. Continuous growth, testing, adjusting, and rebuilding are permanent parts of the trader's journey. So you should continue testing, adjusting, rebuilding, breaking everything down, and rebuilding from scratch. It works. Lastly, stay connected. Engage, share, and learn from others' experiences to accelerate your evolution. As I mentioned, I'm thinking about creating a Discord server. Everything I'm creating, I really want them to be free, especially things that allow you guys to learn, experiment, and talk to each other. So, and basically explore the different findings that we're experiencing in trading, the different things that we're seeing. So, definitely comment down below if this is something that you actually want. I'll definitely create the server. It would just be a server where we discuss different approaches to hedging, trading, findings, and basically a community that isn't based on anyone trying to scam the other, but rather everyone trying to learn and grow together. If you're interested, and actually something I should mention, it should also not be a community focused on advertising stuff to each other, but rather just a community for growth. Just a community where we are trying to help each other grow in trading. The funniest thing about trading is that it's one of the only industries where everyone can find something that works for them. It isn't easy, but you can do it. So, otherwise, thank you for watching. Thank you so much for bearing with me, being here, even when I wasn't consistent at posting. And thank you for the patience. Thank you for all the love, comments, and reactions that you've shared in the comments down below, and for the messages that I've gotten. And I'd very much like to invite you guys to follow me on Twitter at SmallStepFX. And I'll try my best, and I'm working towards being more consistent at posting, not just trading. And I really hope that comes through and works together. So, thank you for everything, and cheers. Stay tuned for the next video. I'll be posting it very soon since I want to record it immediately after this so that I can again be consistent. But otherwise, don't forget to like, share, subscribe, and comment down below your thoughts about everything that I've discussed. And thank you. Have a great one.